What is the real value of money? An important question, one that should really bother you, given that we face high levels of inflation and, more recently, a depreciating currency. So when this question is asked, as early as I started forecasting the devaluation that was coming, when the USDINR was still trading at 45, I did this discussion both on a YouTube interview and later on NDTV, and what they called it is a coin trick, to explain why there were more devaluations coming and why the value of the rupee would actually fall on the trading floor. Now, one of the places where you get an early insight is the coinage system, and that is why coins are a very interesting place to really start. And the reason for that is that if you go back and study the history of money, it always starts with coins. Coins were one of the original forms of money, and the use of gold coins is there all through history. And if you actually see how devaluations were done in the old days, you'll find that emperors that needed to keep money flowing through the system essentially added a certain content of other metals to the gold coins, and that led to the devaluation of the currency. They continued to do that till the point where they had to introduce bronze and other metals into, when you had to have bronze coins themselves. And at some point, there was always a currency crisis or a change of the monetary system, wars were fought and so on. So that's there all through history. And the good thing is that coins clearly reflect the changing value, and they do that because unlike a rupee, which a note which really is paper and needs to be authenticated, a coin involves production of metals, and there goes into the coin system labor. So essentially all basic functions that cause inflation. So the cost of manufacturing a coin essentially is reflected in the coin itself. You would not have RBI issue 1 rupee coins if the cost of actually manufacturing a 1 rupee coin was much more. Then it would have to change the coinages, else it would be issuing coins of a much higher value to people, and there would be profiteers who would actually think of collecting the coins, melting them away, and making a profit from it. In fact, there used to be such news in the media when I was a teenager, that people actually did those kind of things. So if you actually go back all the way back to the 80s, you'll find that the last currency crisis that India actually faced, which was sorted out in 1991 by liberalization of trading, allowing currency flows on the free on the not on the capital account but on all other accounts. And when that was done, our currency was devalued. If you actually looked at the coin system changing through the 80s, you would actually be able to see what has happened. So if you simply look at this, this is the 10 paisa coin. It's marked 1976. You see the smaller one coming in the 80s, 1986, and somewhere around 1988, you can look at that. So this is how it was done. You can see it in all other forms. If I simply go to the 20 paisa coin right here, this was the original 25 paisa coin that you used back there in 1980s, and this is a much lighter metal that was introduced later on. This big one was introduced in the late 80s. I remember using it in 1988 and 1990, just before the crisis period. And then later you had these coins with a different material, but smaller and looking more usable, more valuable than the old ones. But that had to be done just to capture the loss of value. So all of this happened much before the crisis that we've seen. In the last decade itself, if you look at the 5 rupee coin, you can see this 5 rupee coin, which is still found in circulation, and this one, which was in circulation for quite some time but is slowly disappearing, but was there in the early part of the 2000s, much bigger in size. It's the same if you put them together like this, but when you see the thickness, then you can see that it was much thicker in size, and that's a devaluation right there. So there are two forms of devaluation that occur. One is of course the size that changes, and second is the metal. The metal part is usually hard to guess simply by looking at the coins, but the size part is definitely possible, and that was the logic that I gave then. And so let me just go over it now. What you're seeing here is a half rupee from just before independence, so in fact this is what a half an anna, which is almost 3 paisa, looked like. So when you look at this 3 paisa from much later, then you realize the amount of change that happened through the 50s and 60s. The 3 paisa that was there in the 60s, a very different lighter metal than the half an anna, which is 3.125 paisa, which is almost looking like a 5 paisa coin that was there in the early days. So let's come right to the 2000s. What we've seen right now is the introduction of this 2 rupee coin, which occurred around 5 to 6 years ago, and it was a much lighter metal than what we had right there. So starting from 2000, I think this is one of the first devaluations that I saw, and it's almost 100% devaluation in the early 2000s. The rupee still traded at somewhere between the 40 and 45 mark. Here what has happened is that the 2 rupee coin that was introduced, which had an octagonal shape, almost the same size as the previous 1 rupee coin. Okay, so when you put them together, you see that they're almost the same size, almost the same thickness. There is a slight difference. To me, that's a clear 100% devaluation. And with that, soon after, we saw this 1 rupee come into circulation. Of course, it marks the early 90s, but this one came in place of this older one. And then much later, you had this slightly smaller coin of 1 rupee shape come in. The 2 rupee coin that has recently been introduced is again the same size as the one that you were using earlier. So you see, this is another 100% devaluation right there. Same size, same coin, just gone into half. So that's another 100% devaluation. Now, this is of course the interim 2 rupee coin that was brought in prior to the introduction of this 2 rupee coin. So that's a minor devaluation there too, but I'm just trying to account for the broad ones. So with that, it is also reflected in this 1 rupee coin, which is introduced along with the 2 rupee coin to replace it. And now this 1 rupee coin is essentially the size of the earlier 50 paisa coin. So what we have done is, at least in this time period, I can see 200% devaluations in the currency, and I can also see some change in the metal that has been used. Now, if you just account for that, that's every 100% devaluation means multiply by 2. If there are 2, then you can multiply into 2. That's 4 times, and some metal devaluations along with that. So if I just go with the rate, which was somewhere in the 40-45 range, if I just take the lowest rate, which is 40, and multiply it by 4, I end up at closer to 160, and that's what tells me that that's the amount of inflation that has happened in terms of wages and materials that are going into production of coins. And if that's the case, then the currency itself does not reflect that. As I've discussed before, the real value of a currency really comes into play when there is a crisis in the currency markets, essentially because of trade and capital flows in the modern markets. In the olden days, when you had a fixed rate of currency, it was forced through trade requirements and through what you study in textbooks, interest rate parity and purchasing power parity. But with floating rates, it's mostly capital and trade flows, the actual movement of money, that causes the rate, and therefore instant reflection of real worth does not happen. In those days, the government had to step in and revalue the currency if there was a huge disparity. In modern trade, that does not happen. The price remains the same till a crisis shows up and actually pushes the currency towards or closer to what it's really become worth through all the devaluations of the past. And which is why I think that the USDINR, in terms of its traded value, is extremely overvalued, unlike what most fundamental discussions would state, most of which are based only on current flows, not on the underlying worth of the currency. And therefore, as and when we face a crisis like we did last year, or if anything happens around the world, a global crisis, you see the currency depreciate and move closer to what it's really become worth. And I think that's based on the Elliott wave long-term structure that I've discussed. That trend remains on. The USDINR chart shows that it's in a bull market that's likely to go on for several years, and we will head towards what the money's become really worth. Of course, at some point of time, it need not get to its ultimate value. It's possible that you intervene with changes, fundamental changes in the economy, in the way that you handle the money's worth through interest rates, and there are various other measures that can come into play. But I think we are far from that. We have not yet reached the point where we actually accept that these devaluations are for real. So we are still at the point where we are not accepting what has happened in the past, and so we are far from reaching that extreme. But definitely there's a huge gap between what its real worth is and what it's trading at right now, and we should continue to see the USDINR trending up. That's what I think all of this reflects. It's already in the coinage system, just like I showed. Just in the last 2 years, we've introduced new coins that are a full 100% devaluation, and you can see those devaluations in the cost of almost everything that is going up right now, whether you're buying medicines or whether it's the cost of education. All of them are moving up rapidly. That's all in this update. Thank you.